All right, everybody, I'm ready to start looking for a trade in the market. And I want to start off by hiding my image so you can see that I'm connected to my live broker and I'm ready to place a trade on this chart. And I want to look and see an opportunity possibly setting up. So what I'm going to do is do this. Put this on a 1-minute chart, map out some support and resistance like we see here. And with that said, I have my horizontal lines drawn. I got an idea of where I want the market to go based on where it's been in the past. And so I have that set. And I'm going to draw on a counter trend line and see this set up. How I want to do this is as follows. I'd like to put in a stop loss down here, somewhere below all these recent lows, somewhere down here in what I call the sell zone. And I want to look for a trade to buy into the market up to another location above the market near where I expect it to go based on where it's been in the past. And that's going to be up here, and I'm going to call this my take profit. And how it's going to work is as followed. I would like to place a buying trade here once the market either reaches one of two places. Either down here at a very, very low price, pretty much right on that battle zone. That would be my first entry point. So I'll put this here, entry point at the low price of support. I'll make that a little bit smaller. Or what I like to see is some bullish momentum. I would like to see that the market price is going to be rallying to a higher price. So what I'll do is set a second entry point up here and say entry point above support resistance. Actually, this would be above resistance and the counter trend line. Make that a little bit smaller. And that would be my second entry point. So now I have two different entry points of where I can look to go. So here's the thing that I like to wait for. If I see that the market is in this little area in between, I typically don't like looking to buy the market because we oftentimes will see the trend continues because it's following that counter trend line. It's at a battle zone where we see the markets battling back and forth. So what I would like to see is something like this where the market is pushing lower and lower and giving me a low spot. That's even better. The lower, the better. And what I want to see is after we return to a low spot, I want to look for a point when we start seeing some bullish momentum. So as we see, it came down pretty much to where we plotted this stop loss to be at. And so now what I would like to do is look for an entry point, and I'll move my stop just down a little bit further, somewhere below that low price. And once the market comes back into the buy zone and closes, meaning that this 1-minute candle, because we're on a 1-minute time frame, if this can close above this, I will look to buy the market, and my stop loss will be the same spot, which at that point would be around 7 ticks in order to try to make 5 to 7 ticks. I want to look at a place where the market's been before. So here's what I'll do. I'm going to set this up. I'm not going to hit the button yet, but I'm going to be prepared. And I'm going to put it over here. And I will put in the locations of where I would like this for the exit points to be at. Stop loss would be 5194.50. And as you see, that's where the stop loss would be located at. Take profit, I would like it to be 5199.00. So if I were to place my order, which as we see, the market's going down and it's now around that same price, well, we can just click and move this down a little lower. Let's put it right here and say for this trade, if I were to do this, then I'll move it down to 5193.50. So I have an idea of where my stop loss will be, and then also as well, a location where my take profit would be, this blue point up here. And this would be my risk. This would be my reward. And if I was ready to go, I can hit the button to make an entry into this trade. Now, this is the E-mini. So what I'm going to do is, for my account, I'm going to do a micro. And what I'm going to do is conduct pretty much the same research I just did here. Set it right there. There's my support resistance line, stop loss down here, somewhere below that low price, and my take profit where we expect the market to go. So now, if I were to do this trade, we got a counter trend. It's broken, but it has yet to close above it. Also, we have the market still not closed above this support level, which is now acting as resistance. So in order for me to enter this, I'm going to have this prepared. Put in my criteria, 5197.75. Stop loss will be 5193.50. And here will be my risk and my reward based on the research. Maybe I like this a little better right here, somewhere a little bit higher where the market was bouncing before. So I'm going to move this up actually a little bit and put that right there, 5198.25. So now I have everything set up. There's my risk. Here's my reward. And all I need is for the market to close above that level for me to look for a potential entry. Because now at that point, I have found my support level. I will have closed above the counter trend line. I'm at a low price in the buy zone, and I have closed above a counter trend, indicating a momentum shift potential. So now I have everything set up. I'm ready to go. I'm ready to hit the button. But in order for me to act, this candle, the closing price, has to be above this range for me to hit that button to buy into the trade. We have about 20 seconds left, and we'll see if we get this opportunity. Part of being a trader, in my opinion, is letting the opportunity set up when you have your plan established, and then executing on the plan when the conditions line up and set. Sometimes they do, sometimes they don't. It looks like this one's not yet. So in order for me to follow my rules that I have set, I have to wait one more minute for that to potentially get into the range. It might not come. And if it doesn't come, that's okay with me, because that means I didn't take this trade and avoided a bad potential trade. So I'm just going to keep a lookout, and we'll give it another 30 seconds. And if the market price does show signs that the bulls are going to be bringing up the price to a higher level, then I have no problem hitting this button, having a lot less risk, and having a good amount of reward potential. And if it doesn't, I just exit out of the box. So let's see what happens. We have 7 more seconds. And as you see, it didn't take. So I'm going to exit out of this, and I'm just going to wait for this condition to set up. If I decide to do this, it's got to meet all of my criteria. Part of being a trader is being a patient trader and that is waiting for the opportunity that meets the rules that you have established before you even hit any sort of button. All right, so coming back to this screen here, I've got my chart set up and got my research all conducted. This is on the Micro S&P500 June 2024 contract on a 1 minute time frame. So everything's set up for what I like to look for with a potential trade, and how I'm going to handle this is as follows. I'm going to put my stop loss below this low price before a counter trend line break. And I'm going to look to enter into the market if this candle closes above this counter trend. It's got to make sense. So what I'm going to do is this. Map this out, 51.96, and stop loss would be 51.91.75. So as we see, the market's not giving us necessarily an opportunity where we have more reward than risk. It's actually much more riskier than the potential reward put in front of us. So in a situation like this, I'm set up and I'm ready to go. I'm connected to my live account. I'm ready to place this trade. However, it doesn't really meet my criteria. The risk is a little bit more heavier than the reward. So what I want to do is see something like this set up, where the market price close above the counter trend line, come back down and test a little bit lower, maybe down here, to look for a possible entry. Now, does that mean I might miss this if we get a little spike up? Yeah, it does. It means that we wouldn't get that trade. But what I'd like to do is see this drop to a lower price. Somewhere right here, 51.93.25 looks good. That's the backside of this angle. And then what I'm going to do is, if the market price does touch this, well, once it confirms above, meaning the candle closes after it touches, and it closes above this counter trend line, then I'll go ahead and hit that button, because then I'll have less risk and more reward potential while meeting all of my rules. So right now it's coming close. We just came up to this. It came to a lower price, and we got about 30 seconds remaining for this particular candle to make a decision. So as you see, it's starting to move up a little bit, and right now it's kind of running away from us, and that's okay. I don't mind missing that opportunity. I would rather wait for a little bit of a lower price. And if that means that I miss the run up, I miss the run up, and I'll get in on another trading opportunity. So I'm just going to keep an eye on this. I'm waiting for that lower price, because once again, I expect it to go up based on the research. But I don't like to buy unless I am pretty certain bulls are bringing up price to a higher price point. I also like to buy low prices in the buy zone. So I'm just going to let it drop to a lower price. And if it meets my criteria and hits that lower price, if it does reach there and it closes down at a low spot, but it's above the counter trend line, I will hit this button and accept the risk being down here at a location below that low price to look to get up to a higher spot, which is at a location that the market was just recently at about 13 minutes ago. So I just need to let this give me the condition I need, and it looks like we're about to get that. So in 5 seconds, I might hit this button. Let's see where this candle closes. It's at a low spot. So if I decide to do this, I just hit the button, and now I'm entered into the trade. I wanted to wait for a lower price. I avoided a lot of the up and down movement. And as you see, the risk and reward is about 1-to-1. So it's about equal parts risk compared to the reward. So if I win this trade, I win $11.25 minus any fees and commission. And then if I lose $10 plus any fees and commission. So we'll see how this trade pans out. And the way I look at trading is as followed. If it works, it works. And if it doesn't, it doesn't. I move on and look for the next opportunity. So here's a live trade. And what I'm going to do is pause my video and we'll just watch this and come back to it once it hits either the take profit or the stop loss. And just like that, the trade hit the take profit. And as you can see behind me, the trade executed with a winning trade. This one did take a few minutes. We did experience some drawdown, but this is the benefit of waiting for the opportunity based upon the criteria that we had outlined before we even took this trade.